Hi, Theo here from ElectroFX.com. Welcome to this next video in my day trading series. A slightly different flavor today. We're just going to use an image, and what you see on your screen is a picture that I took as I just exited this trade. Now, if you watched yesterday's blog post, the video of a live room session outlook clip there, this was the trade that I predicted in that video, and now I just want to elaborate on that a little bit further. So in order to take part in this trade, I was watching the 89 tick chart, which is a little faster than the chart that I've been using in all of the videos in this series so far, but this is something that I like to do when I'm sitting at my machine and I'm actually able to focus and trade in a much more hands-on fashion as opposed to a set and forget fashion. So as you can see, the trade triggered right here in a very similar fashion. We are just looking at this pattern. It was a slightly lower low, but it's very, very slight. It's only about a pip. And we're basically trading what is pretty much the equal low followed by the higher high. Now add the spread and we ended up getting into the trade there. But it's exactly the same concept as every other video in this series so far, only on just a tiny bit faster scale. So as you try and analyze what's going on here, it's important that you keep your eye on the bigger picture, and that's why I have multiple time frames open, but you can still see it even on this one chart, and I wanted to just look at things on one chart so you can understand the simplicity. And then by adding these extra charts, you're not actually adding complication, you're just adding different resolution to read these various scales. So starting from the beginning, you can see that the overall structure of this market is a trend continuation pattern. This is the type of move that we're trying to get into on a bigger scale. And then as you zoom into this chart, you try and analyze how things have arrived at this European Open marker, which is this grey vertical line on the chart here. So if you were up during the Asian session, then really this was your entry and that was your stop loss into the trade, and you'd be targeting here for the conservative equal or lower high, and just above it if you're playing that higher high, because it's a trend continuation pattern. The fact that we've, by the time I wake up and get to my charts, it's this time right here, that entry point had been missed. So you have a choice really. You can just re-enter this trade at the point that you would have entered it. This would have been your entry price right here. So once price pulls back below that, of course you could just enter, and then you would use that as your stop loss as if you had entered over here. Now the European Open does present us with the initial battle of the day, and you get to understand who's taking over, and of course the preference was to go long, so we're looking for the ability to go long. And as we arrive to this point in time, you can understand that that is relative to those previous waves there. And so now as you get this tiny pattern, this is just another scale down and you're using it, and now you can use that as your stop loss. So that shrinks your stop loss significantly. You're still acting upon the same type of evidence-based approach and reading things in the same way, which is the beautiful thing about WavEFX. It's you learn how to read things in one way, and then you just do it on various layers, and you can do it on as many layers as you want. It's the exact same principles over and over again. So we've entered the trade here, and because we've now used an even faster layer of price action, we have a much better stop loss than we would have down here. And watching this trade go, if it was set and forget, personally I would just play it conservative and get out there, because it's still above a 1-to-1 risk reward. And if you're not watching the charts, that's just a very safe play. You're more than likely to get to your target than not. So that would be the safe idea. And the fact that I'm using the tick chart, I'm able to sit at my machine and focus and trade in a more hands-on fashion, means that once we did come up here, there's a little spike here that you can just about make out if I remove that green line. So little tiny reaction at a point, the first point of interest for take profit, but nothing significant enough to concern me. and then price just headed on up and there was really nothing stopping it. Now just off the screen over here is an area of highs from a previous high, which is why this box has been drawn up here, and it really did look like a fantastic place to just target the higher high. Now I don't have a screenshot handy of what happened next, but this thing pretty much reacted here and then turned around, so it was a very good exit, and something that I wouldn't have done if I wasn't playing it in the hands-on style. If I was playing it set and forget, I would have been happy just to enter stop loss and get out. But when you see it moving so one directionally unchallenged, then we can shoot for that higher high, and this was really just a perfect place to shoot for the higher high. So simple as hitting the hotkey that I have, and that trade is done. Now I did still enter and use my stop loss and everything on the trade manager, and I placed what's called a lock profit trigger right here, so that just in case I'd got distracted, the email would come in telling me that we'd reached this point, and I could come to the chart and then focus once more and watch it for the rest of the trade. So that's just a little more insight here into this trading style. I hope you've enjoyed this video and got something from it. Do stay tuned for more.